crypto market has gone wild in recent times. Bitcoin braces itself for the upcoming halving event. Ethereum has a successful update called Dencun, and Solana goes way up in value because of all the meme coin hype. Now, Ripple CEO Brad Garlinghouse predicts the entire crypto market could be worth over $5 trillion by the end of the year. So despite such optimism in the crypto world, where everything seems like a win-win scenario, what went wrong with FTX, the now bankrupt cryptocurrency firm that led to one of the biggest financial frauds in US history? Watch this.
How are you guys doing this morning? Aside from all of us in front of you.
Here, guys, how about we give you a shot?
And then let us be.
You have to go around where you came from.
This elderly couple are the parents of Sam Bankman-Fried, the poster boy for crypto. Both Stanford law professors were leaving the Manhattan Federal Court after their son's hearing. Once called Crypto King, FTX's former CEO Sam Bankman-Fried was recently sentenced to 25 years in prison for stealing $8 billion from his customers. Before its downfall, FTX was a major cryptocurrency exchange. It was one of the biggest platforms for buying and selling digital currencies, making its founder, Sam Bankman-Fried, a prominent figure in the financial world. FTX attracted millions of users who traded crypto on its platform. Then what went wrong? To understand this, let's go back a decade. It was 2014. A fresh graduate from MIT with a degree in physics started his career as a trader. He specialized in exchange-traded funds or ETFs, where you find investments selling for a low price on one market and then quickly sell them for a higher price on another. 3 years passed. By 2017, Bitcoin was booming, but there weren't many platforms to easily buy and sell it. This 25-year-old man saw this gap in the market as a great opportunity. He started with a clever trade, buying Bitcoin cheaper in the US and selling it for more in Japan. This success led him to create his own trading firm, Alameda Research. In 2019, building on his experience, he launched FTX, a cryptocurrency exchange. This marked the beginning of Sam Bankman-Fried's journey as a poster boy of the crypto world. But big trouble hit FTX in November 2022. The US and other countries started investigating them for breaking securities laws. It also came out that FTX used a whopping $10 billion of customer money to support its sister company, Alameda Research. Following the downfall of FTX, the cryptocurrency exchange, its affiliated trading firm, Alameda Research, and 130 other companies within the FTX group all filed for bankruptcy. Bankman-Fried resigned amid the company's fall. In November 2023, Bankman-Fried was convicted of 7 counts of fraud, conspiracy, and money laundering. Prosecutors accused him of stealing money from FTX customers and using it for his own benefit. This money went towards things like donations to politicians, other investments, and even personal spending. Bankman-Fried, however, claimed he had no idea. He said he only found out at the very last minute that his companies were using customer money for things it wasn't meant for. He faced a potential 110-year sentence under federal guidelines. Prosecutors argued for a 40 to 50-year term, but the judge deemed it excessive. The judge prioritized preventing future fraud over a lengthy sentence. As part of his sentence, Sam Bankman-Fried was ordered to forfeit $11 billion in assets. This means the government will take control of all that money or property from him. He has vowed to appeal his conviction and sentence. So what happens to FTX now? An April 2023 report by FTX debtors points to failures of FTX Group's management team before bankruptcy. It says the FTX team lacked appropriate management, governance, and organizational structure. In January 2024, FTX announced it would not restart its cryptocurrency exchange. Instead, it will liquidate all assets and return the money to customers. The reimbursement amount will be based on the November 2022 price of the cryptocurrency, which is when FTX collapsed. So is FTX an isolated incident, or a sign of deeper problems in the crypto world? Well, more cryptocurrency companies have fallen on hard times. Genesis, a cryptocurrency lender, filed bankruptcy on 20th January 2023. Genesis owed creditors nearly $3.4 billion after the downturn of the cryptocurrency market with the FTX news. People are already skeptical because of the lack of stability of cryptocurrency, its lack of security, and increased scams. The broader consequences in the cryptocurrency market are not known, but this large collapse in cryptocurrency's short history may deter a lot of investors. Well, that's all in this edition of Connecting the Dots. We'll see you next week with more raging issues that touch our lives and imagination. This is Munmun Bhattacharya signing off. Goodbye for now from all of us in the Delhi newsroom. Take care and stay safe.